Welcome to The Explainer. Today, we're diving into something absolutely crucial for anyone trying to navigate the high-stakes, fast-paced world of futures prop trading. We're going to break down the critical differences between emotional, off-the-cuff trading and structured, automated execution using NinjaTrader. Honestly, if you want to understand how to actually keep the capital you trade, you are definitely in the right place. So, let's kick things off with a question that honestly baffles so many folks in this industry. Why do so many incredibly skilled, technically proficient traders completely fail their prop firm evaluations? It's super frustrating, right? You know how to read the charts perfectly, you understand market structure inside and out, but technical skill alone just isn't enough to cross the finish line and get funded. There's a missing link here, and the fascinating part is that it usually isn't the trading strategy itself. To figure out how to fix that, we've got a quick roadmap based on the sources. 1. Why prop traders fail. 2. The true cost of mistakes. 3. The 4 pillars of discipline. 4. The automated trading workflow. And 5. Scaling your funded journey. All right, jumping right into section 1, why prop traders fail, and specifically the trap of emotional trading. This is the psychological quicksand that catches almost every aspiring day trader. When real money's on the line, logic just tends to go right out the window. It's a stark contrast between two entirely different worlds. In one world, you've got the chaos of lacking discipline. We're talking overtrading, blatant rule violations, revenge trading after a loss, and just operating with absolutely no plan. But in the other world, we have the antidote, structured execution. This relies on a digital safety net rather than sheer human willpower. It brings in rule-aware execution, constant account state awareness, and automated discipline. Moving on to section 2, the true cost of mistakes, or as I like to call it, the price of indiscipline. $300 or more. That is the hard, painful, upfront cost of a failed evaluation. When emotion takes the wheel and you accidentally breach a daily loss limit or a trailing drawdown, that fee you paid to the prop firm just evaporates. Poof, it's gone. And honestly, the bleeding doesn't stop there. $150. That's the typical reset fee you're forced to pay when you break the rules and want another shot. These resets, they're a total trap. 2, 3, 4 resets in a single month. Suddenly you spent nearly $1,000 just trying to pass a test, all because you couldn't control your position sizing. But wait, it gets worse. $10,000 or more. The source material highlights this as the ultimate agony in the industry, a blown funded account. Just imagine putting in weeks of work, passing the evaluation, finally getting funded, and then losing it all because you traded without a stop loss or ignored a massive news event. That isn't just a lost evaluation fee, that is a massive loss of potential capital and future payouts. Okay, let's pivot to solutions in section 3, the 4 pillars of discipline, and how to build a rock-solid foundation. To stop that financial bleeding, the sources lay out a foundation built on 4 essential pillars that every successful prop firm trader needs. Number 1, protect capital. Your primary job isn't actually to make money, it's to not lose it. Number 2, stay within rules. The prop firm's boundaries are absolute, and you literally have to respect them. Number 3, consistency. Prop firms don't want to see one lucky home run. They want reliable, repeatable base hits. And number 4, scale smart. You absolutely have to master the first 3 pillars before you can ever hope to scale up. So how do we actually stick to those pillars when the market gets crazy? 2 words: rule-aware automation. Think of this as software capabilities that actively monitor and enforce your daily drawdown limits, your profit targets, and those tricky prop firm consistency rules. It acts as the ultimate structural antidote to human emotion. When your brain is screaming at you to move your stop loss and take more risk, the software steps in and just says no. It's your digital safeguard. That brings us to section 4, the automated trading workflow and the Prop Trader Pro ecosystem. According to the source material, the absolute core objective for evaluation traders is learning how to operate safely inside drawdown rules, daily loss limits, profit targets, and trade sizing boundaries. Because let's face it, that is exactly what you're being tested on. The market is wild and unpredictable, but your execution must be perfectly contained. To actually pull that off, you need a bulletproof system. Plan, execute, journal, feedback. And I really want to emphasize that this is not just some to-do list. It's a continuous, vital loop designed to build profound rule awareness and long-term consistency. You plan the trade, you execute it, you rigorously journal the results, and then you use that feedback to refine tomorrow's plan. The goal is to trade with structure, not emotion. And the secret sauce here is how rule-aware automation and event-aware controls wrap directly around your execution phase. While you're in the trenches executing trades, the automation stands guard. It enforces your daily limits and targets in real time, physically preventing you from taking that one extra impulsive trade that historically ruins an evaluation. And speaking of those controls, the event-aware features are an absolute game changer. We're talking about news blackout windows and automatic flattening of your positions right before the session closes. Think about how many traders blow their accounts simply because they forgot a major economic report was dropping at 8:30 a.m., or because they left a trade open 1 minute past the end of the day cutoff. These automated controls completely eliminate those easily avoidable yet highly destructive risks. No more unforced errors. Finally, let's look at Section 5, scaling your funded journey and choosing your path. Every trader's journey has distinct phases, right? You've got to choose your path carefully. On one end of the spectrum, we have sim-only learning. This is the beginner's phase where you absolutely must start operating in a safe simulation environment to build up those execution muscles. But on the other end, once you've proven your consistency, you graduate to multi-account funded scaling. This is the advanced phase where you jump into multi-account distribution logic, essentially using trade copiers to replicate your structured winning strategy across 5, 10, or even 20 funded accounts at the exact same time. This whole structured path actually maps directly to some really accessible tools and pricing tiers the source material outlines. The starter tier at $9 a month is perfect for beginners who are strictly learning futures trading in sim. Then there's the growth tier at $19 a month, providing the tools you need specifically for passing single account prop firm evaluations. And finally, the elite tier at $39 a month unlocks the advanced capability for managing and scaling multiple funded accounts. The main takeaway here is that there's a specific structured path that fits exactly where you are in your trading journey, ensuring you always have the right automated safety rails. I really want to bring this all together with a core philosophy pulled straight from the source material. Trade with discipline, protect your accounts, scale with confidence. Structured execution today builds long-term consistency tomorrow. I think that's just an incredibly empowering summary of everything we've covered in this explainer. Discipline isn't some restriction that holds you back. It's the exact framework that sets you free to scale up safely. So I'm going to leave you with this one final provocative question to think about. Look honestly at your own trading habits. Are you trading with emotion, just hoping for the best? Or are you trading with structure? If you're relying purely on human willpower to survive the intense pressure of prop trading, you're making it exponentially harder on yourself. It's time to take the next step toward automated discipline. Build the structure, protect your capital, and the scaling will follow naturally. Thanks for learning with me today, and I'll see you on the next explainer.